G'day and welcome to this week's video. My name is Robert Gowdy, and this week we're going to cover off looking at the market over certain time frames, and I think a picture really does say 1,000 words. So I thought it'd be ideal to have a look at the graph at some different timelines to bring what's happening now into perspective, not downplaying the seriousness of the coronavirus and the effect that it's had on the share markets. Now, the uncertainty that this virus, like all viruses or terrorist attacks had prior, it worries people, it worries the market. And you can see here, if we just draw a trend line from the peak of the market down to where we are today, and this is Friday the 6th of March, it's coming up to 12% down, and today is a pretty tough day. It's nearly 2.5% down. But what I want to do is bring this in perspective and start pushing out the timelines. And think about our investment time frame is not to when we retire, but essentially our life expectancy. So at age 46, my bet is, hopefully, that I'll make it through to 90 in good health. So I'm not far off a 45-year investor. So 40 years plus is the time frame. But if we start to push things out 3 years, you can see it's still a huge and very sharp and violent downturn. Push it out to 5 years, push it out to 10 years, and all of a sudden some of these dips, although they're quite violent, and these are natural occurrences in the share market all the time. These are things that people need to understand is a normal part of the share market and can be seen as an opportunity rather than a threat. But then if we throw in all of the data that's available, and it takes us all the way back to early 82, so Jan 82, and you can see here was the 87 share market crash. Here is that's the tech wreck. Obviously Australia wasn't overly exposed to the tech wreck because we didn't really have that much tech within there. This is the GFC. That's probably a once in a lifetime event, that one. Here is the lead up until the end of 2018, and here's what we're experiencing now. How far could that go down? I have absolutely no idea. So when I'm bringing clients at the moment and we're saying, we recommend you buy something now, the market is cheap, it's on sale, the first thing most people say, well, do you think it'll go down further? And my very honest answer to that is, I have no idea. No one does. But if we look at this time frame, and we will draw a bit of a line way back to 82, and obviously this is very much long term. That is, you can't quite see the one there, but it's 1,074%. That is tenfold your money from back then, and that is excluding all the dividends. This just looks at the share prices. So if we start to add dividends into that equation as well, and then we start to add compounding, the figures are still phenomenal. But what the market does, if this is the average over the time, to get to that figure, that straight line, the market never works like that. The market will never stay at fair value, as determined by all the investors, the professional and the amateur investors. We'll have these peaks of over-exuberance, and we'll have these troughs of pessimism where people are worried, and that's where we are right at the moment. So use these times to take advantage, buy some more. Don't do it all at once, perhaps because you don't know how low it could go, but it's an opportunity to invest some. If it goes down further, invest a bit more. But this is not financial advice, it's only general information. Please speak to your financial advisor to get some, get their feedback and their advice in this area. It's important times to continue to speak to your professional advisors at this time, because they will help you stay on course and make the right decisions at a tough time. Thanks for listening. Please give us a thumbs up if you wouldn't mind. That's great. Subscribe to the channel if you already haven't done so. And those that have, thank you very much for supporting us. I appreciate it. And we'll catch you next week.